Hey, my name's James Nicholson. More mortgage providers are pulling their deals. What can you do about that? Well, in this video, I've got you covered. I've been speaking with my broker this morning and looking to get the best advice to give you guys and share with you what you should be doing as property investors or just someone that maybe owns a property right now that wants to get that security of a longer term fixed rate deal. Now, this channel is all about my investment journey. I'm currently building my portfolio and I want to invite you along on that journey with me. Now, I'm also building a portfolio for my two daughters. I've got Georgia, who's 21. We've just got 2 properties so far this year, and you can see all about that on the channel. We bought one at auction, which went crazy good. We refurbed it. You can see all the videos of the purchase, the refurb, and the refinance at the end of it. And we've just bought a flat in Dorking as well, which we've just rented out. We're also building a portfolio for my little baby, Amelie. So do join us on this journey by taking that finger of power, smashing that subscribe button over there, and hitting the bell notification so you get notified. Now, the last week has been insane, right? And look, I had a few comments on this that a lot of people feel they had a crystal ball and predicted this. Look, we could tell that during the pandemic, printing lots of money was going to cause high inflation because that's happened in history before, right? There's a clear path that if you overprint money, then you will get inflation because it's happened in many regions all around the world. So we knew that might happen. But what we didn't know is that the UK government would create a mini budget and the market would react so badly to it. And because of that, the pound has really devalued in the last few days. And they reckon that possibly, if we don't do something to stop it, we could be worth £1 to $1. Now, what that's going to mean is that anything that we import is going to be significantly more expensive. That is then going to drive inflation even more, which is really what we're trying to stop at the moment. And so because the stock market has said, we're not comfortable with this, the pound's crashing, stocks and shares have been going down as well. The Bank of England's come out and said, we will do anything that we need to do to make sure that we curb this inflation, that we curb the drop in the pound. And indications are that the next meeting that the government, the Bank of England, have is in November, middle of November, end of November. And they're expected now to possibly put the rates up by as much as 2% in one go. Now, the rate rises that we've had so far this year have been 0.25%, 0.5%. And now we're looking at potentially going up by 2% in one go. Now, if you're on an interest-only mortgage and you're not on a fixed deal, you're on a variable rate, that's going to be a massive difference to your online payments. And so the lenders at the moment are really worried because they don't know what to offer as a product. And so when you're going for a mortgage application, it takes a good couple of months to get that processed. We've been doing one recently. I've still not finished it. I'm doing one at the moment with Virgin Money. I think we're in the 15th week, and it's a very simple remortgage because they're so busy. There's so many people trying to get onto these rates. They just can't keep up with like the demand. In fact, one of the biggest stumbling blocks was getting a valuer around. We had to wait weeks and weeks and weeks and weeks at the beginning just to get the property valued. Then the report took ages. Then Virgin took ages to offer a mortgage offer off the back of that. It took weeks and weeks and weeks. And so mortgage lenders have yesterday and today just removed nearly all of their products off the market while they sit there and evaluate what should they be offering interest rates at. So right now, you might be in a position where you're on a deal that's coming to an end or you're on a deal that's finished. And so you're considering fixing your interest rate. And that's a smart thing to do. And so I'm recommending anyone that I know, fix your interest rate and look at considering doing a rate for 5 years, because this is a short-term problem. It's probably going to last 1.5 years though, that we go through a rise in interest rates. Interest rates are looking to potentially rise to 6%. That's what they were saying yesterday. Now, what I'm seeing today is they're saying it's going to rise to 6.25%. Now, that's just the Bank of England's rate. That's where the banks borrow the money at that price at 6.5%, then they put their margin on top. So you could easily be looking at a 9% interest rate that you're going to get, right? Now, different lenders will have different rates and they might have a little bit more competitive. You might get someone that offers 7.5%, but it's going to be a lot more than what you're paying right now. And that's what you've really got to factor in here when you're looking for those deals. Now, if you took a rate, fixed it for 5 years, it might be more than you're happy to pay, but at least it gives you that certainty that it won't go up anymore. And so if you have an opportunity to fix, then do it. If you have a deal that's going to end next year, now that is something that my partner has. She has a deal that ends next Christmas, and that's when the rates are going to be at this peak here. So what we're looking at doing, or she's looking at doing, is just paying off her deal early. So breaking her deal and paying the penalty, right? The penalty is like $1,000, and you can go to your broker or your lender and just ask them, what is the penalty to get out of this mortgage? And if it's $1,000 or something, work out your numbers, speak to a broker and see if it's worth it. But it may be worth leaving that deal early and fixing a new deal now, rather than waiting for that to come out, right? That's a real consideration here. Now, I know a lot of you guys watching this are investors and you're thinking, hey, I found a deal and I want to buy that deal. And good for you, because right now there are going to be some really, really good deals. There are going to be people that just want to get rid of their property because they feel that there's too much hassle coming. And so they will give you a property at a good price just to get it sold quickly. Now, you can't get a mortgage right now, or there's a lot less opportunity. So what do I recommend to you guys? Well, what I would do first and foremost is speak to a whole market broker. And you might need to change the broker that you use. Maybe the broker you use got a small panel of lenders. Find someone that's got a huge panel of lenders and ask them to start an application process with you with someone that is lending. Because what you're seeing in the newspapers is they're saying Virgin stopped lending, NatWest, HSBC, but there are thousands of other little companies. So for example, my 2 last mortgages were with a company called Landbay, and Landbay are still taking applications and they are still lending money. So you could look at one of these other lenders, but you need a broker to do that deal for you guys. You can't do it yourself. It's very important that you get a broker involved and get them on board for this. So that's what I would recommend. Now, would you carry on investing? Well, this was a great question that I got in the comments yesterday on the video that I made. Someone said, why would you buy a property today when you could buy that property in maybe 6 months or a year from now at a 10% discount? Well, the reason I would buy today is because the rates are still low. We're not at 6%. We're not at 6% now. We're at 2.25%. Right? It's quite a way to go to here and to here and to here. We are still at 2.25% today. So if you get an application in and you're buying a property today, you can secure it at 2.25%. And that means that the monthly payment, the mortgage payment on a 100 grand property could be lower than if you waited a year from now and that same property dropped to 85%, but you've got to pay a 9% interest rate. You're going to be paying more money per month on an £85,000 property than you would today at a 2.25 interest rate. And that's why if there's a good deal, if you're a buying and holding, then that's fine, right? If you're buying and holding, and that's the strategy that I have. I want to get rid of my properties when I die, right? Well, my children will take those on from me, right? And so that is my investment strategy. I'll exit the deals when I die. Now, you can still find deals today, even whatever's happening in the market. If it's going to go up 10%, down 10%, no one knows for sure what will happen. But if it does, you can still buy a property below market value and add value to the property. Like my last deal in Doncaster, I bought a property for £60,000. I spent £12,000 doing it up. It's now worth £10,000. I've got 25 grand of equity that I made in that property in just 8 weeks. That's 25% of the value of the property is in equity. So if the market drops 10%, I'm not in negative equity. And in fact, even if the market dropped 25% and the house was now worth 75 grand, that's still okay for me because that's what I paid for that property. And I would have had to, if I got it as a vanilla buy to let, I'd have had to put 25% in it anyway. So I'm still in the same situation. And so that is important, looking at deals right now, that you can add value. Can you add a new bedroom? Could you get high cash flowing models? Like, could you rent it out on Airbnb, or could you rent it out as an HMO? If you do deals like that, they're still going to work throughout this difficult time. And that's what I want to get across, because a lot of people are going to panic. A lot of people are going to miss opportunities. And this could be the biggest opportunity of your lifetime to really, really finally get some investment properties at a price you can afford, an interest rate that's good. There's still good opportunities out there, guys. Even if the rates go to this and the market corrects, the deals will still work at 9% because they will have to, because people will have to drop the price till it's at a price that works as a buy-to-let. If they don't, they won't sell their property. Does that make sense? If it does, give me a like. If you found any value in this video, give me a like. Any questions or comments or opinions, do comment in the description, guys, in the comments here below. We're just about to run a live event in London, and I'd love to invite you along as a VIP guest. The best way to get that to happen is in the description. I'm going to put a link. In that link, you click on there, you fill in your details, and we'll add you to the VIP list. As soon as tickets out, you'll get pinged straight away, and you can grab a ticket and come and meet us live in London. But lots of stuff interesting going on. Do check out all the other videos on my channel. I'm going to keep you updated with market updates all through this difficult time, so make sure you subscribe. Check out this video right here, and I'll see you guys very, very soon. Bye for now.